recognize that we have a forum, and I call this meeting to order. Prior to proceeding to our agenda, I would like to welcome a new member of our committee, Mr. Rajesh Velagapudi. Welcome, Rajesh. We look forward to your contributions to this committee, and to the town at large. I'd like to give you a few minutes to introduce yourself and let us know more about you.
Sure, thank you. Thanks, Chairman. So I'm Rajesh Velagapudi. I'm a Shrewsbury resident since 2009. Been part of a different committees before. So my recent one is a CPC, which I transitioned from CPC to finance. So for work, I work as a process excellence leader. Responsibility is bringing strategy into implementation of the strategy and reviewing the progress of those strategic initiatives. So I was more excited to be on finance committee and see that through. So thanks for the opportunity. I'm looking forward to work with you all and contribute back to the community. Thank you.
Thank you, Rajesh. We look forward to your contributions. We will now proceed to the agenda. Item 2 on the agenda is to accept the minutes of March 25th, April 13th, April 27th, and May 15th, all of 2023. Hopefully everybody's had a look at these minutes. They were on the Google Drive. Are there any points of discussion or clarification? If not, we'll do them one by one. Let's do them all together. May I get a motion to approve all 4 minutes?
A motion to approve all 4 minutes.
Second.
All in favor of the motion, please say aye.
Aye.
All opposed, please say nay. The motion passes unanimously. We shall now proceed to item number 4 on the agenda, the town manager's report. Mr. Mizikar.
Good evening, Finance Committee members. We have several reserve fund transfers that we are seeking your consideration on. Keith, do you want to come up real quick? So we have 4 of them in total. We have sufficient funds within the reserve fund and we'll have some left over. I've asked Chief Vona to come in this evening to review the details of his transfer request if you have any. We've had a lot of longer term outages within the fire department and some overtime needs, which has driven the requirement for $222,000 transfer request. The chief can characterize how those long-term leaves, mostly medical needs, have impacted the budget. And of course, generally speaking, and I know the Finance Committee knows this well, is we don't have the luxury to not backfill the positions when someone's out, especially on long-term leave. So I'll stop there. And Chief, you just want to provide a quick overview?
Well, we had several firefighters that had off work injuries that resulted in them being out for 2 to 3 weeks and then coming back to work, but that's overtime you have to fill all the time. I have one firefighter who's been out now for about 30 shifts right now, who had a slip and fall on the roof of a recent house fire. He stepped on a wet piece of vinyl siding, fell on his shoulder, and now he needs some type of reconstructive surgery on his shoulder. So he'll be out at least another probably 4 to 6 months. We've had some other issues involving firefighters, just working on, I hate to say it, but after COVID, some alcohol issues and mental health kind of issues that they were dealing with that led to periods of them needing professional counseling and help, which has been successful, and we've returned some folks to work. But we were told all along that the first responders will be fine during COVID. It's after COVID you're going to start seeing some of the problems. So that contributed as well. We've just had a number of longer than normal duration, like I say, injuries and health issues and medical concerns that we've had to deal with this year. And we also had an addition of some staff as well. the staff that we added all needed to go to the fire academy. So that's 12 weeks where they're not working on the shift, and when people are out, we have to backfill. And we had 3 guys this year, 12 weeks, 11 to 12 weeks apiece, that they weren't able to work on normal shifts because they were in the fire academy. And we just started 4 new firefighters on June 8th, and they're all in the fire academy as well. So that added extra salary. And then we had to change in one position. Our mechanic, Joe, who saves this town a ton of money and oversaw the whole radio project, has been shifted to day shifts now. He's no longer working as a firefighter, but it basically expanded our complement of firefighters back in right around the first of the year to 1 more position. So, and when he was in that transition, that resulted in more overtime to backfill his coming off the shift. So it's been a complicated year as far as keeping up with all the personnel concerns.
So Chief, you mentioned physical injuries. I was unclear, the firefighter who fell from the roof, was that during work or
Yes,
after? I see,
yes, that was at a fire.
at a fire.
And actually, he didn't fall off the roof, he fell on the roof, and fortunately, one of the other firefighters
Right.
grabbed onto his harness and held him, but he sustained a tear in his shoulder, so.
Are you seeing any uptick, or is it a downtick in terms of mental health issues related to COVID?
I definitely saw an uptick, but we've also added some personnel
Mhm.
over the last, 5 or 6 years. So every time you add personnel, you add a potential for somebody else, an additional person, to have an injury or a problem. So it's like I've always said, we build these great projects like the Market Basket Supermarket. It's great. But that's going to mean there's going to be more people there, so there's going to be more slips and falls, and there's going to be more cars there, so there's going to be more car collisions and accidents. And every time, I was asked one time why the medical was going up 10 to 12% every year, the number of medical calls we go on. It was directly related back to the population rising by 10 to 12% every year. So you add more, you have the potential for more problems, so.
Yeah, okay.
Chief, and thank you for your service, and hopefully the firefighters having issues will be back on better than ever and going forward.
Yep.
In the beginning, I was a little confused. I know one firefighter got injured on the job, but there was like 4 or 5 others. Were they all injured on the job, or were some of them injured outside of the
Some
job?
of them are injured outside,
Okay.
like just working in their yards, or some of the guys play hockey and occasionally get a hockey injury, and or running, jogging, and a couple of them run marathons, and every once in a while they sustain an injury doing that. So we want them to stay in shape and do things, but the flip side of that is you can get injured at times.
So is the town paying for the disability for outside the job getting hurt, or they're just taking their vacation or whatever they're?
Yeah, they use their
Their
own
sick time.
for
Okay.
that, yeah.
I was just wondering if this was going to affect the town's insurance for going forward. If it sounded like there was a lot of people, but obviously the ones not on the job wouldn't count against us.
Yeah.
Okay.
Don't we provide short-term disability for people who get injured
So-
out of work?
The fire department collective bargaining agreement's a little bit different. They have more of a traditional sick leave policy where they earn a day and a quarter a month, roughly. So it's what we refer to as sick leave plan 1. It's it's kind of like the legacy sick leave plan, but it's what's still in their agreement. So they can accrue up to 120 days of sick leave.
Understood. Gene, please.
You mentioned that we're at 222,000,
220
and you said you had sufficient funds from where?
in the reserve fund.
From this present reserve
Current
fund?
year, yes.
What is the balance after the 220?
So there's 305,000 in it, and this 222 is the first transfer, so it would be 83,000.
Do you expect more?
Yeah, there's 3 other requests. Ultimately, at the end of the night, we would still have $69,000 left in the reserve fund.
Thank you.
You're welcome.
Rajesh?
Thank you, Chief. Chief, thanks for the service. Very quick question. You mentioned about mental health issues. So, do we have someone on the staff to deal or assist them, or do we have to send them out?
We send them out. We have human resources and we have EAP, and we basically match up with the resources that are available. In the fire service, we have our own folks that we deal with regularly for the whole state, and it's also for police and corrections as well. Places that they can go to get help that's funded by the state, and their own insurance covers it as well. But we use different facilities like McLean out in Boston area, and we use another one called the On-Site Academy, which is out in Westminster, and they have programs designed specifically for first responders because and military folks, because it's a lot of mental strain on the job too, because you see a lot of things that other people don't see. That are
Thank you.
Jim?
Hey, Chief, just real quick, just, I guess within your tenure, is this the most challenging event you've had to deal with in the last several years in terms of everything kind of coming together as one?
Yeah, this has been.
Yeah.
Yeah.
Okay.
Yeah.
So it's out of the ordinary to have this many
Yes,
things kind of come
pretty
together.
much every year I've had to ask for a transfer because we don't plan for the injuries,
Right,
but it's a rough job. I mean, people get banged up all the time. And, we see knee injuries and you're carrying around 60, 70 pounds worth of equipment every time you get off the truck. Knees and shoulders end up getting injured over time even too. But this year has been especially challenging. But even with my previous town manager, he said, just keep a list of everything that happened for the year and then we'll go over it at the end of the year, rather than overfunding
right.
for something that might not happen, so.
Thank you.
Yes.
Please, Diana.
Is that something we plan to continue, or do you look to maybe plan and understand how many transfers we're doing per year and maybe build that into the budget in the future?
So we have been working to increase the funding that primarily we use out of these line items. Between the fiscal year 23 and 24, the two primary line items that we use to offset these costs for overtime and sick leave are increasing by 8%. So that's more than double the other salary and wage line items. And then I was just actually looking right now. Then since 2017, we've added $60,000 to the sick leave line item and $90,000 to the general OT line item. So we're trying to get closer.
Okay.
This year, I think the other thing that the one firefighter who had sustained more than likely a debilitating injury for his career remained on for nearly the full fiscal year as he was going through retirement disability proceedings. So that caused nearly a firefighter the entire year that we backfilled his shift. So we actually paid for 45 firefighters and budgeted for 44. So that had a significant impact, nearly a third of this request. So we are I'd prefer not to do this reserve fund transfer every year. We're trying to get there.
That person is off the books as of
They've been retired.
last month,
Yep.
yeah.
Any other questions from the committee?
All right,
So
try to
nor-
make it lower number next year.
Thank you, Chief.
Thanks, Chief.
Thank you.
So Vikram, normally, Mr. Chair, normally the committee votes individually on the reserve funds. We do have 4 this evening, but traditionally we voted on each one of them individually.
Very well.
I'm sorry.
So let's start with the first one. you want to present it first?
That was
That was-
just, that's,
Yeah,
that was the
the fire
chief's. Yep.
Okay, so, may I get a motion to approve request number 1 for a transfer of $222,000 from the reserve fund?
So
So
moved.
moved.
So,
A second?
excuse,
Oh,
it's
sorry.
220.
222,
22.
222,
Oh,
Sorry.
okay.
Yep.
222,000.
Yep.
May I get a
Second.
second? All in favor of the motion, please say say aye.
Aye.
All against, please say nay. The motion passes unanimously. We shall proceed to request number 2. Sorry, my computer is misbehaving.
So request number 2 is for $4,000 for the accounting department. This year, fiscal year '23, the audit contract was actually $4,000 higher than was budgeted, so our annual single audit with Scanlon and Associates was budgeted at $30,000, and when we settled the contract in the fiscal year, we settled at $34,000, so we're requesting the $4,000 for audit purposes.
Dennis, please.
Just curious as what it's like a 10% overrun, which, was it,
It's a
we had more work to do this year, or?
It's a 5-year agreement.
5 years.
This is year 1 of a
Okay.
new 5-year cycle. So we were late in the renegotiation of it, and again, it went up.
Okay.
Yeah.
So it was the renegotiation piece of it, not
Yes.
necessarily, okay.
Yep.
Any other questions? Milind?
So one follow-up on that, so are we saying 34,000 every year for next 5 years or just for this year?
I think it goes up incrementally over the 5-year period. I don't know if Dave, you know a percentage or not.
It's like a few $1,000s,
Yeah.
maybe 2,000 to 4,000.
Yeah.
Okay, thank you.
Any other questions from the committee? We shall now vote to approve request number 2 for a transfer of $4,000 from the reserve fund. All in favor, please?
Oh.
Sorry, may I get a motion? My apologies. May I get a motion to approve?
So moved.
And a second?
Second.
All in favor of the motion, please say aye.
Aye.
All against, please say nay. The motion passes unanimously. We shall move to number 3, the building department salaries and wages account.
So this is a $10,000 request. Within the building inspector department, we had several employees out of the office for medical reasons throughout the course of the year. And we utilized our contracts that we had in place for reciprocal services from other municipalities. That resulted in needing $10,000 additional that we didn't anticipate at the beginning of the year, because we didn't foresee those 2 employees being out for as long as they were. So again, this is a request for $10,000 to cover services within the building department.
Any questions related to request number 3? If none, may I get a motion to approve request number 3 for a transfer of $10,000?
So moved.
And
Second.
second? All in favor of the motion, please say aye.
Aye.
All against, please say nay. The motion passes unanimously. We shall now move to request number 4, which is for the Health Department operating expense account.
So within the health department operating expense, we receive and cover the cost of the disposal of sharps. So any community member who utilizes intravenous needles for their medical care brings their sharps to the health department for proper disposal of, and we keep them out of the waste stream and out of the blue bags. Due to a larger than anticipated receipt and disposal cost for the sharps, we're requesting $2,000 to cover this cost overrun.
So is this, Kevin, Mr. Mizikar, for employees only or
No, this is for residents.
residents? Okay.
Yes.
Jean, please. Please.
Quick question. It's a great service. Problem is, anybody just can walk in there and drop them off. Doesn't matter whether you live in Shrewsbury, Northborough, Westborough, Worcester, et cetera. They never ask for any identification or where you live or anything.
Yeah.
Maybe something like that should be
That's fair.
implemented
Yeah.
on there,
Yeah.
because, you know, CVS is no longer taking them, Walgreens is no longer taking them, Walmart, they're all, so there's gonna be more and more. It's definitely gonna increase, there's no doubt about it on there.
That's something we can definitely look at.
Do we have any suspicion or data that proves that people from, we don't know?
We don't know, we
We
could,
don't know.
we could look into it.
Yeah. That's a good
As
suggestion.
prices go up, absolutely.
Any other questions from the, Rajesh, please?
Thank you. So this is based on the volume of needles that are in. It's not a flat fee for.
That is correct, yes.
Thank you.
Any other questions? Yes, Dennis?
Are there any facilities doing it for free still? I mean, I know a lot of pharmacies have stopped, but
I'm not sure. I
So
don't
it's-
know of any, but that,
so it's a needed service, obviously, but
right.
as Gene pointed out, it could be abused by, you know, other towns.
Any other questions? Rajesh, please.
Maybe a follow up on that. So, does any other towns is it doing that?
Most towns do
Yeah.
this, yes.
So is it so they have this maybe a similar problem, right? Increase.
Yes, yeah.
Thank you.
Any other questions from any member of the committee? If not, may I get a motion to approve request number 4?
So moved.
Second.
Second.
All in favor, please say aye of the
Aye.
motion.
Aye.
Aye.
Aye. All against, please say nay. The motion passes unanimously. The next item is the status of the fiscal year 2023 revenues and charges.
I'll just provide an overview of expenses, and then Alex will provide an overview of local receipts. So generally speaking, this year, given not only the reserve fund transfer requests that this committee has just reviewed and approved, which we're grateful for, budgets are running closer to the budgeted amount than maybe previous years. We made several transfers at town meeting to cover expenses that were higher than normal associated with utility usage and accounts. So generally speaking, we don't anticipate any other budget or expenditure challenges for the rest of the fiscal year now that we've cleared these 4 matters up. But we will anticipate lower than normal turnbacks across the board this year than we have in previous years. I don't quite understand how free cash will play out this year. Alex will review revenues, which are in good shape from a local receipt standpoint, but definitely the money that we turn back that was appropriated in FY '23 will be a lot less than FY '22.
Thank you. So, with receipts printed out before you, you have our Schedule A local receipts. These figures are through the end of May. So through May, we've collected almost 13.5 million, which is about 1.5 million over our projected figure for FY '23. And just to compare, through May of last year, we had collected 12.1 million. So we seem to be on track with our figures and our projections, and obviously still have 1 more month we'll be able to collect.
So Kevin, I had a question on what you mentioned about turnbacks as far as the budget is concerned. So could we correlate that with any of the situations of the economy, like inflation or?
Absolutely.
Yeah, so,
I think it's most directly tied to inflation. You know, whenever we were creating the FY '23 budget, you know, in the fall and early winter of, you know, the fall of fall of '21 into the spring of '22, I think that's when we were starting to see inflation. So the FY '23 budget didn't really account for significant year-over-year growth, and I think that as we experience higher costs throughout the entire fiscal year, that's why we'll be turning a lot less money back. And as I said, you know, we did those transfers at town meeting to cover utility costs, which electricity went up about 56% from July 1 till the middle of the fiscal year. So that's definitely been the biggest challenge, is inflation.
Dennis,
I have
please.
a couple questions. One is, inflation seems to be abating, and has been for, do we, for next year's fiscal projection, should we now be expecting more turnbacks? Because we probably budgeted a higher, I'm assuming we budgeted a higher inflation until the numbers.
So, I think that we're budgeted appropriately, and maybe you could correct me if I'm wrong. So I think inflation is abating on a year-over-year basis, but consumer goods and fuel prices aren't necessarily declining over their 2021 levels. So I think we're appropriately budgeted this year.
Well, gas prices are declining
Yeah, well, that's true.
significantly.
So we could see a benefit in that area. Our contract for fuel is a variable price rather than a fixed price, which may play its hand a little bit more. I think in the fiscal year 22
Yep.
into 23, we were paying about $2.40 a gallon for fuel, so we're still gonna definitely pay more than that.
Yeah.
I think the electric, utility, those costs, we've made significant increases in them, and we'll kind of have to look how the first quarter of the fiscal year plays out to kind of really be able to answer that question, but I'd be hopeful, optimistic,
Okay.
yeah.
And then I did have a follow-up.
Sure.
Well, I'm Gene, you had a question
Oh,
first.
I just,
Okay, I noticed a couple different things on the revenues. Cannabis revenues, are way down on the first one, but they're up on the host community agreement. Are we seeing, is there an impact with, every time I go by a billboard, it's another cannabis facility going in. Should we be expecting that we're gonna have lower revenue there going forward, since there's now a lot of competition and a lot of availability? Are we budgeting that in?
We definitely have one more cannabis, so we receive the cannabis funds quarterly from the
Yep.
Commonwealth. So we have one
Okay.
more quarter to receive in the excise. It's my understanding that because of the competition and the number of, so we still have 2 operating retail facilities. It's my understanding that most cannabis operators have had to reduce their costs because of competition.
Yep.
So likely we will see less year over year and not meet the budget mark in that category. Alex, I don't know if you have anything else on that.
Yeah, right.
But some of this is sorry, I didn't,
Please go ahead.
yeah, so is some of this because we're still waiting for that last quarter
We
payment?
have one quarterly payment, but I don't think it will make up the difference of the whole 135. I would expect it to be around $60,000.
Yeah, I would say the average of what we've been getting quarterly is about 60,000. Last quarter was 54,000.
Yeah, my point was, I think we
Yep.
need to think about that as budgeting goes forward, that's
Absolutely.
probably, that cash cow is probably dying.
Yep.
Gene, please
I
go
was
ahead.
just gonna ask that, basically a follow-up there. Of the 2 operating facilities, are either one of them part of the corporations that one corporation has just pulled out of Mass with 13 facilities?
No, fortunately, our 2 operators are large nationwide cannabis operators, but they are PharmaCannis and Acreage Holdings, so they haven't, I think they're not that company that's pulling out at
Yeah,
this point.
yeah. Okay.
Yep.
So, just help me understand number 20, the investment income, because there's a huge variance on that, and I think that offsets a lot of our losses.
So I think when Mr. Patterson comes up and provides his presentation about all of our investments, it will become clearer to that. I think it's really a function of a number of things going on there, what we anticipated in having in our investment accounts as we went through our capital improvement projects, and just a number of factors that we're gonna roll up our sleeves on when he comes up. And then certainly, as we were budgeting for fiscal year 23, we were going through a pretty significant market downturn, and we're very cautious in the budgeted amount that we used. So I think the greater detail and then a conservative budgeted amount is why there's such a large difference there.
Please, Dennis.
Two more. One was on the recurring Medicaid. Is that sort of a one-time big, I mean, we had budgeted 30,000, we got 255. Is that kind of a one-time budget because of everything going on?
It's a tough item to budget for generally. It's associated with reimbursements through the school department, and depending on the promptness of the reimbursements that we receive from the state, sometimes we don't receive them before the end of the fiscal year, and we'd been burned a couple years in a row where we had budgeted the 250, which is kind of an expected number, but didn't receive it. So we're just conservative in our estimate.
Okay. And then the other one was the Selco Solar.
Yes.
Is that replacing the payment in lieu
So
up
this-
above
Except the last
for the Selco Solar?
So the payment in lieu in line 4 is from the Shrewsbury Housing Authority. And we actually received that check for a little less than $50,000.
It's about 47,000.
Oh, so we just received it, didn't make this,
Yeah, I
okay.
received it on Tuesday evening at the select board meeting. So that line will meet the mark there.
And then sort of one last question is, if they do cancel funding of school lunches, how would that, which is at Congress right now, being voted on, how would that affect the school budgets? Do we know? Is that something we end up having to pay for, or would we just charge lunch?
So it's my understanding that the Commonwealth will be funding that
Okay.
through part of the fair share / millionaires tax, so we'll basically be held harmless.
Okay.
Mr.
Rajesh.
Two questions. One is about line item 22. So we see a significant decrease up there. Do we know why?
So the miscellaneous recurring supplemental tax is, it's just a little, believe it or not, early in the fiscal year to have full funding in that. The assessor, according to our bylaws, because we accepted a general law, is allowed to capture any additional growth that occurs from January 1 through June 30th of a year. So that's a supplemental tax bill that we mail out. So that was just mailed out. Amy, do you know what supplemental bills went out by any chance? No. You haven't, we haven't mailed them out yet. So, it's just late in the fiscal year to have received all the funding for that. So, whether we receive it this fiscal year or not, I'm not exactly sure if they haven't gone out yet, but, this is the time of the year when they normally go out. And, again, it's that difference between the values that we had on December 31st, 2022 and June 30th of 2023 this year coming up.
You can do a follow-up, then we'll come back to Milan.
So do we anticipate any increase or additional expense on this humanitarian relocation of the migrants or?
No significant budgetary impact on the town side. On the education side, the state provides reasonable or significant, I would characterize, amount of funding. So they provide a $1,000 grant per school-age student who attends Shrewsbury schools, and then $108 a day per day that they attend. So technically, if they attend an entire school year, we would receive $19,000, which would be more than sufficient to cover
Right.
the individualized cost for that student. So the state handles the other care and custody matters of those individuals, so I don't anticipate a budget impact, at least at this point.
Thank you.
Milan.
So based on these numbers, I just wanted to see, like, do you see an impact on the stabilization fund? I know, during the town meeting, we were thinking about here, like, we can squeeze additional year. the numbers are kind of running similar, so what kind of impact do you see?
So this is generally, depends on how June performs, but this is about what we are expecting for the fiscal year. And these funds will ultimately roll over into free cash. We certified $9.2 million in free cash at the end of last fiscal year. I don't think that we'll certify that much again. So I don't think it has a big impact either way on the operating accounts. I think we'll still have sufficient amount of money from free cash to transfer into our general stabilization account to continue to work towards that 5% target. So this is pretty anticipated. We're conservative in the budgeting for local receipts because we're still trying to ensure a sufficient amount of money is generated in free cash so we can build those general reserves. So although it's over budget, it's kind of on target with what we'd anticipate.
Okay, all right. One more.
Sure, please go ahead.
And then, so related to the school lunch program, I know you mentioned about the millionaires tax, I know there is additional, is there additional guidance coming from state, because that tax was more for education and transportation? Just wanted to see, have we received any guidance?
So we are generally aware of how the House and the Senate have budgeted for the millionaires tax / fair share tax. It's rather similar when it comes to education. So they're both carrying about $100 million for funding the school lunch program. So I'm confident that there's nothing else to be worked out. They just need to pass that final budget without any more surprises.
I guess the follow-up,
Dennis?
do we have an idea, is that the revenue that's coming in? Are they bringing in, originally it was gonna be $1 billion a year or $2 billion a year. We probably lost 1,000 residents because of the tax, but do we know what the numbers coming in are?
I don't know, but I know they're poised to spend $1 billion, so
Okay.
I would assume that they have it. I don't know.
It is government.
And
Okay.
Please, Glenn.
just follow up on that, so do we know, like, in what range do we fall as a town, like, is there a tier? Like, how does state allocate certain
Yeah.
numbers to certain,
It really depends. The state uses a number of different approaches. When it comes to education, there's a really complicated formula established in Chapter 70 that defines, it's based on community's ability to pay, the number of students and things like that. So we are considered a minimum aid community. So in the eyes of the Commonwealth, they've provided more funding to the town for educational purposes than the formula provides. So on an annual basis, we basically receive between $30 and $60 per student, which still brings us about $180,000 worth of revenue a year. But yeah, there's the Chapter 70 allocation is a formula. Now, when it comes to something like school lunch, they will just provide the funding on a reimbursement basis that's needed to cover the cost of that program.
Thank you.
Are there any other questions related to this? Not, we can proceed. Thank you, Mr. Mizikar.
Thank you.
The next item on the agenda is item number 3, our meeting with Bartholomew and Company.
So, Finance Committee members, with us this evening, we have Treasurer Collector Amy Perkins, who you're all familiar with, and then I'm happy to introduce to you, most of you for the first time, Chuck Patterson with Bartholomew and Company, who will tell you all the details of what he does on behalf of the town. I will just reflect back and let everyone know that Chuck was the former Treasurer Collector of the town of Shrewsbury for about 10 years? 14 years in the early 2000s. So, any other introduction you want to do yourself, Chuck? Please go ahead, and
Thank you.
we look forward to your.
All right. Thank you, Mr. Chairman, members of the Finance Committee, citizens of Shrewsbury. Glad to be back. I am Chairman, Chief Operating Officer, and Senior Vice President of Bartholomew. We manage the town's long-term funds. When I go into the presentation on that first page, you're going to see my presentation that would have been done at the MMA. The purpose of the presentation and tonight on why Kevin and Amy have asked me in was towns have lots of money. And most of the time, the public doesn't understand how it can be invested. So the intent here is to shed some light on your 3 buckets of money, how it can be invested, and then ultimately tie it back to your actual securities in each of the funds. So with that, on the first screen, you will see in the back of the presentation, any laws that I refer to, they are in your presentation, and you'll be able to actually see them. So the first bucket on the left-hand side, it's for your general fund, opera money, bond proceeds, your payroll, accounts payable, your operating money. And that falls under Chapter 44, Section 55. And the law states that it must be, and it clearly states, safety, liquidity, yield. With safety, the paramount phrase there, or word. You cannot invest in stock, and you cannot really extend duration. Duration means length that you would own a security. So what you'll see, the only duration that you have is that you can buy 3-year CDs. Otherwise, everything has to stay under a year. The next set of money that you have is your trust funds, stabilization, cemetery perpetual care, depreciation, or your long-term funds. The town has library funds, scholarships, that kind of stuff. That's Chapter 4454. But then it kicks you over to what we refer to here in the Commonwealth is the list of legal investments. The list of legal investments is managed by the Commissioner of Banks here in the Commonwealth. There's about 23 stocks that you can own, and then you'll see that when we get into the portfolio, you own all but 2. There is no duration cap. You can buy a 30-year mortgage in this money if it was needed. In most cases, you'll see the duration here is probably about 2 to 2.5 years. The last set of money is your OPEB money. For those that don't know, OPEB is other post-employment benefits. And what that would refer to, everybody has heard about the unfunded pension liability. This is the unfunded health and life liability. And GASB, Governmental Accounting Standards Board, back in about 2006, said that towns across the country must begin to acknowledge that liability. And the town has done a good job putting money away. The funds will be managed, as it says on the slide, under 203C, which is the Prudent Investor Statute. What that means is this fund should look very much like your own pension or your 401k, and you're taking risk. You have, in the town's account, it's a 70-30 asset allocation. Very much there to grow, and the intent of that is to grow the money, because the more it grows, the less that you have to appropriate at town meeting to meet the long-term liability of OPEB. So, like I said, I would have made this presentation at MMA, and I find it's a good, quick look and to really show what kind of money all our communities have in the Commonwealth.
Chuck, I had just a question
Sure.
based on the first slide. So as far as general funds and ARPA funds and all that,
Yeah.
If we could invest it, then how do we maintain cash flow?
Great question. I'm going to speak for Amy. Certainly she could answer some of it. Towns here in the Commonwealth have many bank accounts. So they're going to keep their money relatively short, money market accounts through the local banking system here in the Commonwealth. To your question earlier, to the manager, about how you guys have made so much more income. What has happened, if you recall, a year ago, short-term Fed funds rates were 0 to 25%. Currently, those rates are, for a one-year treasury, they're at 5.25. Okay, to your question about cash flow, the operating account that we manage, that's in between those two buckets. So your duration question falls in that. All the other bank accounts that the treasurer, Amy, has, they're cash. So that's how she can pay it. If Kevin and Amy need money out of this, we have communications with them and say, okay, we have to, whatever bill, we don't have the cash flow in the local banking system, they'll come to this account to get that. So we manage duration that way.
Jean, please.
Question, what is our normal amount that we save in the bank?
In our normal bank accounts, so at the end of May, end of May, we have 65 million.
65 million, that's just sitting there at zero. Are you getting any interest on that?
No, yeah, we are. And all individual accounts there are. They're just not invested with.
Okay, what is that percentage?
I don't have that
You don't have
available. I can get that for you though.
65 million.
What you've seen, to answer that question, what you've seen is the banks were somewhat slower to raise the interest on deposits. What we have seen is you're getting 3.5%, 4.5% range on most banking deposits. They have not, on the transaction accounts, you're not seeing that change, and that's relatively low. Again, I can't speak for the banks, but they, when you have your checking accounts, your accounts payable, and the payroll accounts, those are paying probably less than 1. But the other money market accounts, what we have seen across the board, are in that 3.5% to 4.5% range.
With banks the danger of banks failing because of some of the crises that we've been going through related to inflation and higher interest rates. Are we insured totally to protect all our assets in these accounts?
Yeah.
Yes.
Yes, yeah, okay.
So we have so we have letters that we can provide to you with Eastern Bank, who's our primary accounts are with, that describe how our funds are secure and what they do to ensure that we don't have those cap issues if something like that were to occur.
And all the money that we have here, it's set up in an investment account. All your securities are in the name of the town. They have their own CSIP number, so you own corporate bonds, all of treasuries, agencies, those are yours. And then behind that, you have SIPC coverage through National Financial Services and excess SIPC coverage. So in the event that National, which is a subsidiary of Fidelity, fails, you have full coverage there.
Dennis, please.
Just real quick question on the money that we have in banks, the 65 million. That's more of a cash flow, right? That's the accounts just to pay everything. So does it go from like 65 million down to, did you say 6.5 or 65 first of all?
65.
Does it ebb down to like 30 million, or is it always keeping around 65?
It varies, so it depends on how many warrants we have that month. That number does not include the money that's in our payroll and our AP because that's technically already spent.
Okay.
Rajesh, you had a question?
Thank you. So is there a statewide guidance on where the municipal funds can be saved or taxied, and then what can be invested, what cannot be invested types of?
Mm-hmm. So certainly, Mass General laws, as I spelled out, set out what you can do. So in the 4455, it would be up to the town treasurer to determine where he or she wants to place the money. So I always teach that falls back to the law. So the law says that you must invest the money to receive some sort of interest, keeping safety in mind. So there is guidance from the state and state law.
I think we're good. Thank you.
Okay? If you can go to your next section on trust funds. As I stated at the beginning of the presentation, these are funds that fall under Chapter 4454. So if you go to page 2, you'll see up on the top left, that is the balances. So $17.7 million as of May 31st. And as of June 30th of last year, you have $13.2 million. The asset allocation mix, and I won't go through every line item here, you have 37% in corporate bonds, common stock, about 30%, treasury bonds, all the way down to bond funds. And as you can see, we have made some changes to that from the previous fiscal year. When you step down to the lower section, pretty much it's the same numbers. Now you're going to just see on the bottom of page 2, you'll see what the yields are. You'll see current yield. So as you're getting back again to the Kevin's presentation earlier, you'll see current yield on June was 1.93 versus in this account, it was 2.37. And we'll see a much different number when we talk about the operating.
So Chuck, you had mentioned that we're allowed to invest in some 22 or 23 individual
Yeah.
stocks. So that's covered under the common stock over here?
Correct. So under the 29%, further down in this report, you'll actually see all the different individual stocks that we have. So to get to that question, if you go to page 8 of this report, 8 of 11, on the top, you'll see that 29.42% is invested in Rockwell Automation all the way down to Coca-Cola, paying you a dividend yield of 2.92%. The only two stocks that you do not own are General Electric, because this account here, we want to have income. Since they cut their dividend to 0, there was no need in this account to own that. And then we do not own Wells Fargo. Wells Fargo, we sold out of Wells Fargo because we didn't want our treasurers to have to deal with, why do we own that bank? There are for numerous reasons. So these are the stocks that are allowed by Mass General laws to be owned.
And is there any, how do they determine which stocks? Do you know that,
Yes.
how that process works? Or?
That could be a whole nother presentation, Mr. Chairman, but to keep it short, they look at the list every July. Believe it or not, credit unions, which cities and towns cannot invest in, must request to the commissioner of banks, can we have this company on the list? This list has virtually never been changed since I was in Shrewsbury. And it's unfortunate because all the cities and towns, private trusts have to use the list. It's just never been maintained because state chartered savings banks who had to use the list exempted themselves from needing it. So that left no oversight, and that's what's happened. So we have tried to get this thing changed, and we had Staples call. They must be a Massachusetts-based company with a minimum of a $50 million IPO, principally doing business here in the Commonwealth. So we were having a bunch of Massachusetts great companies call up the commissioner, and they called us up. Please don't do that anymore, because there is a process, but credit unions don't have any interest in having it changed. So, Mr. Chairman, it's unfortunate that is the list. As you can see, it's heavyweight in a couple of sectors. For instance, the pharmaceutical industry. As a sidelight, I was speaking to Mass Bankers the other day. Mass Collector Treasurers Association has put forth a bill to allow cities and towns to take these monies and use the prudent investor. It has gone through the House and got stuck in the Senate. It is now in the outside section of the budget. It's the furthest the law has ever gone, and then that would then be a local option to then go prudent investor, and then that way there would open up the opportunity.
Question.
Dennis?
Has anyone ever done a comparison of this basket of 22, 24 stocks, whatever it is, versus just any of the indexes? I mean, it seems to me that, I'm looking at these, I mean, Pepsi and Coca-Cola, they trade, and correct me if I'm wrong, they trade pretty much in tandem a lot of times. So when they're down, they're down. You know, I'm just wondering, has any of the investment advisors, such as yourself, we've put together statistics showing that this is probably a bad thing for towns to do, and that might help with the legislation?
That example I used in front of Mass Bankers. I said to them, could you please look and count up how many drug companies are here? Because he had made the comment that this is a safe investment.
Yeah,
And I said, okay, God forbid that something happened to the COVID shots and they didn't work. What would have happened to these portfolios across the Commonwealth? He goes, I got it.
yeah. I
So
mean,
we have done our due diligence.
because this also looks like interest-sensitive risk here. You have utilities that are sensitive to interest rate movements. Dividend-paying stocks are very sensitive to interest rate movements. When interest rates goes up, a lot of times dividend stocks go down because you're buying, you know, you're getting it guaranteed from the bonds.
We agree.
So, okay.
We agree. And that's the challenge. The Mass Collector Treasurers has tried to change it. We have tried to do prudent investor. It's a challenge because this is not something that's going to make the front page of the Boston Globe. It's not attractive. We have tried, my other colleagues have tried, and certainly the legislative committee for the Mass Collector Treasurers have tried countless times.
And then I have one question for
Sure.
town manager. Is this something that the different towns could band together and also propose as legislation, or even the finance committees of the different towns get together and say, listen, this current law makes no sense for, I mean,
There has been a lot of activity in this area through the Massachusetts Municipal Association and the Finance Committee Association, Town Finance Committees Association within the MMA. So,
Okay.
with no success really to date, but, again, I think it is because of that stronghold of credit unions and how they use this list or don't have to use this list. I forget which one it is, but as Mr. Patterson said, it seems to be a local option that may be coming forward through this budget where we would be able to go prudent investor, which is a more open opportunity for investment. You know, the bottom line with these funds, I'm sure you all can sympathize with, is this is where our stabilization accounts are. And, you know, the intent is good, because, you know, these are stable giants within industry, normally produces a reasonable return. The last thing I ever want to have to do is come back to you all or town meeting and explain why the stabilization account went down year over year. So, that's why it was intended, but, we would like some flexibility, and I think there's been a number of opportunities. Maybe this year we'll actually see something.
I had one more question.
Sure.
Have you done a risk profile of these 22 stocks to show, you know, the overall risk of these? Because I'm looking at the industries, it's not very selective on industries. You have companies that basically compete with each other. I mean, it seems to me there's a higher risk of owning this basket of 22 stocks.
So what we do internally, as you can see, the asset allocation as far as size,
Yep.
we try to mirror the risk profile that is with the S&P 500. So we are going through, we're not just saying, okay, we're going to put 50 in all of these.
No, I understand that, but the S&P 500 has 500 diverse.
But
things,
they have the sectors, so
Yeah.
we're trying to do it that way.
Okay.
It's unfortunate with only 23 stocks or so, it's very, very difficult. To your point earlier, cities and towns can file special legislation. And that's some of the push that the MCTA has said, look, General Court, you're receiving 5, 10, 15 special legislation requests. Why not just fix it once and then let the local entities? So we're hoping, whereas many towns have already filed the special legislation, special acts, hopefully now it's gotten to the point and we'll know when the governor gets it on his desk on whether it passed.
So we don't have permission, I mean, the ability to invest in index funds like based on the S&P?
Not in this account.
Not in this particular account?
Correct. Not in this account.
Rajesh had a question.
Thank you. So with the asset allocation, is that done by like active managing allocating this, or is it on a robo?
Every one of these is separately managed accounts. In this case here, we have talked to, or spoken to Kevin and Amy, and said, okay, how much equity do you want to place in this account? Similar to the discussion that we had in the OPEB account. We just changed that asset allocation to 70-30. Once that's done, it's up to us to determine the internal mix.
Okay.
We are discretionary investment advisors, so once we set out through the investment policy, then you'll see a different mix on the OPEB versus here. You know, you're saying, okay, we got 30% in these 20-something stocks, the rest is gonna be in fixed income. At that point in time, we determine where the best place to be. Pre-COVID, this account could have been loaded with CDs, because that's where interest rates were. When interest rates are 5 and 6%, well, yeah, you were probably overweight CDs. We've had tips in this, Treasury inflation protected securities. It's all dictating on where the best place to be. So to say that, you know, are we going to have 10% in this and 20%? It's more fluid to that than just, okay, we're going to lock it in, because it may not be a good place tomorrow. So that's how we do it. There's no, besides on the OPEB, we have the 70-30. Then we get into our own matrix of how much domestic equity, international equity, domestic bond, and so on.
Thank you.
Okay?
Are we taxed on these earnings?
No.
Gene had a question.
Quickly, so basically, the decisions are being made by the town manager and the treasurer.
Correct. They give us the upper numbers.
Okay, I just like a little clarification. On our retirement board, we have a committee.
Mhm.
They're making returns of 7 to 10%.
Mhm.
Is this time we should be having a committee to be working with these ones?
Not with these. These are great point that you're making. These are they're following that very restricted general law. Okay, that chapter 4455 in the legal list. This is what you're going to get when you have 70% in fixed income, where fixed income rates were a year ago 0 to 25 basis points. That's what you're going to get here. When we talk about OPEB, that's where most towns have it as the treasurer is the person in charge. I envision on OPEB, when these OPEB accounts get into the hundreds of millions of dollars, I then see down the road that you might start to see committees. But at this level, it's really falling on the treasurers. On the OPEB, we manage about 180 OPEB accounts throughout the state, and we're dealing with 3 committees. Otherwise, when you look at the OPEB statute, the treasurer is the custodian, and then if they don't form a committee, then the custodian becomes, the treasurer becomes the trustee.
Can I just do one? I
Sure.
just don't quite understand. You said we usually look at them about once a year.
No.
How often do we look at them?
These, we have a committee that's looking at pretty much daily. When bonds come due, they're looking at these accounts. They're making a determination. We meet once a year to determine the or we meet twice a year to determine the upper level asset allocation. But our team internally, there's a team of 6 that are looking at the securities in all of these accounts. This account here doesn't go on autopilot, but almost. The OPEB, you get more activity because of the nature of the account. In this, you're going to sit there and buy 70% in fixed income. As far as the legalist stock, if we've seen a particular stock get a good run-up, we're going to sell high and buy on the lows. So that's what the team does internally. So they are looking at all of these on a daily basis. That's their job, to make sure that all the accounts are meeting the asset allocation set out by the town, making sure that the cash is needed by the town, and making sure that, you know, we own the proper securities for the risk level that the town wants.
And do you have any automatic rebalancing to make that happen in case, like, one asset goes higher than the other one?
They look at it, like,
Okay.
as we know, we've had a good run lately.
Right.
They will go in, actually, the other part of this is on the fixed income side. They have been reallocating to safer securities, safer corporations. If you believe that there's a recession, that, depending on who you listen to, well, you want to make sure that you have good companies in the event of a recession. So the team is looking at all the assets that we own very quickly. The company manages about $4 billion, and of that is $2.6 billion is city and town money here in the Commonwealth, Maine, Rhode Island, and New Hampshire.
And, what tools are provided to town manager, treasurer for risk modeling? Because, you know, how do you pick the 70-30 versus a 60-40? Because you say we redo the allocation twice a year. So I'm assuming there's a max amount of equity that could be put into these types of accounts in a minimum. But how do we determine the risk level? There's like Riskalyze, all these other tools out there that investors use. And are we using a tool like that here, or?
I can't speak internally, but we are doing all of that behind the scenes. And then when we come out, we talk about, you probably have heard about your discount rate.
Yep.
And then your unfunded liability. I don't know what the acronym now is, because it's changed. So we provide the information to your actuary. And we talk to the actuary and say, okay, for instance, Kevin and Amy and I and Kathleen, who sends her best, unfortunately, she's at another meeting tonight. We have been talking on the OPEB side about placing real estate and private equity into that. So, you know, you increase your risk, but you increase your yield. So in this account, not so much, more so on the OPEB.
Okay, 'cause I just know there's tools out there.
That's what we use internally, and then we
I
come
was
back
wondering
to
how
that.
much you shared with Shrewsbury so they could see what's going on in those tools, because it's a big decision to make, and, you know, the more information that we give the treasurer and, you know, town manager and crew, the better informed they are.
Yeah, so, I mean, it is an ongoing dialogue. You know, I know we've met more than twice already this fiscal
Yeah.
year, and we've been working to, well, we certainly rely on Bartholomew and Company to advise us and help us make these decisions, like nearly every other city and town in the Commonwealth. You know, generally, you know, gauge and understand the type of account that we're using, what we're allowed to do, and allow Bartholomew, who have the detailed experts, to invest on our behalf within those general parameters. just like the retirement board does, right? Like the retirement board doesn't make detailed decisions about individual investments. They have a separate advisor. I think it's Day Hall and Company or Day Hall Associates that invest their funds for them. It's an open relationship. I've worked with Bartholomew and Associates in every town that I've worked with in Massachusetts, and you know, as Chuck said, they have over $2 billion in municipal investments, and we certainly rely upon them. And we've just recently increased that risk profile within OPEB, as you know, we now have a significant amount of money. We have an understanding of what our goals are on both what we're going to invest annually and where we want to be now that the pension system is funded. So, and of course, like I said before, what we can't do, because we're prohibited by law, but also what I wouldn't want to do is come back, like the retirement board is obviously looking at a 30-year horizon, right?
Yep.
Chuck said we're at about a 2.5 year or so investment here. The pension system lost, you know, 8% of value in calendar year 22. Like
Right.
we can't do that on these funds.
Yep.
So.
So I can continue going through the various slides. I'll just point out in total return on page 3, TWR, this account, keeping in mind the safety that we are required to have, you still grew the account by over 3% since inception. And the inception was in November 2001. And this account produced nearly $3 million back to the town. The next slides just quickly show you your asset allocation, credit quality. I'll point out in the middle it says not rated. Those are your CD, and as you can see over in the first column, you see the 158,000, and then you see your average life on that's third pie chart. Go down to the next tab. You'll see your yield to maturity in this account. We buy a lot of our bonds at a discount. So you'll see yield to maturity on the far right of 4.65 with a coupon yield of 1.97. And then I misspoke earlier. I said 2.5. Your actual duration is about 3 years. And that's based off of what's happening out there in at the market. We're going to start to increase that duration. If we believe that the feds are done, we want to lock in longer rates, higher rates. The next page where you do have the benchmarks, you'll see that your portfolio since inception made 2.94. If the town left the money in a bank, which could be, because that's what they could have done, you would have made, the comparable number would be the US Treasury bills at 1.22. If they just invested them in the Bloomberg 1 to 3, you would have had 2.2. And as a comparison, we try to maintain purchasing power, and that's why you have CPI there at 2.5. So again, this account's very, very difficult to compare anything to because it's restrictions. The next slide is very simple, a lot of interesting things, and I'll leave that up to you to go through at a later date, but those are year-over-year numbers. Page 8 is what we talked about earlier. Page 9 is your corporate bonds. So as you can see, there is, you own some electrical companies. All these bonds are on the legal list. So even on the fixed income, even on the fixed income side, we must follow the legal list. Okay, and that's paying a return of 2.16. To your point earlier, where we had the asset allocation, when I was here in Shrewsbury, this whole account was only government agencies. And today you have 1.39% because it's not the best place to be. So then you go to the next slide, page 10, you'll see that you have 28% in US Treasuries. And I think everybody understands why. And if you look on that very first one, You see on the principal column, it's 899,000. Today, if we sold it, we'd only get 868,000, but at maturity in November of '24, we'll get 920. So, bond yields and prices are changing. We hold these to maturity. As I said earlier, we try to buy them at a discount. And, it's a good thing that interest rates have gone up, because now everybody's making more money. But it's a bad thing when you own a lower yielding security. So that's where our duration play comes into play. So,
Chuck, do you have any like sort of North Star in terms of any percentage you think you can achieve, given the restrictions and given the fact that inflation's around 5, whatever, I don't remember the numbers, but so our money is definitely losing value at 2 to 3%.
I can't give you a projection. I can only tell you, and Kevin, we provided to Amy, on the fixed income side, I can give you a 1-year actual number of what you're going to earn, over the next year based off of the securities you own. But I'd be reluctant to say, yeah, I think we can make this in this world. At the end of the disclosures, you'll see your trust fund report. So you'll see these are the funds that we manage. You'll see anywhere on page 1 of that, Affordable Housing Trust, Charitable, Library, Other Library, School Trust Funds, Other Trust Funds, Cemetery, and then you go all the way down to your stabilization funds. Each one of these lines receive income and gains based off its proportion share of ownership.
So they're managed as one
pool.
One pool.
And Mass General Laws 4454 allows you to push them all together, and then, thank God for Excel.
It's also cheaper to run it that way.
Yes.
What, may I ask what the fees are?
I believe it's 18 basis points.
15?
18.
18?
When I was here working, way back when, I would sit there and I would get from a regular bank, MMDT, not bank, but a banking institution here in the Commonwealth, and I would sit there and had all these different line items, and it was $1,000. Okay, it was 1%, and I'd do the calculation, so thank God for Excel. But that was all hand done. So if you, any other questions on the trust, I can get into OPEB. Okay, when you look at page 2, you'll see the SAN chart. Over time, as Kevin alluded to, we are now at a 70-30 asset allocation. So 70% equity, 30% fixed income. That's where we recommend. This is long-term money, but as you can see when you look at the SAN chart, it wasn't always there. So over time, previous treasurers and previous other managers in the town said, no, I'm comfortable with, say, a 50-50 or a 60-40. And with Amy and Kevin coming in, they understand the longevity of these funds and have moved up to the 70-30. And you can see, I like the SAN chart because you can see how the asset allocation is. And as you can see way over on the right-hand side, you see that your domestic equity is your biggest piece versus what it was early on. Getting into the real numbers on page 3, the town has put in $8.1 million. The withdrawal in there, we were correct. That was a transfer that was put in, then was removed. You did not have $1.4 million in expenses, but it got in, and then it was not supposed to go there, and it came back out. It didn't affect performance, so it looks like a withdrawal. It was a withdrawal, but it never should have gone in the first place. So as you see your time weighted return, is 4.77%. And then your, so far this fiscal year, you've done 4.81%. The brown line, which I like, shows the flows in, thank God right now, and you're there at the brown line. Then you can see the blue line is your market value, and it's interesting, the drop. So if you look at, right after the 9/30/2019, that was COVID, that big drop. And then you can see other drops and other rebounds that we've had. Next page is your performance. What we want to do is compare to the third one down, the 55, 25, 20 equity bonds, liquid alts. The only issue that you have in what you have for the benchmarks, they are, as of today, that is a 70-30 asset allocation. As we saw in the sand chart, it wasn't always at 70-30. So the benchmark is looking as though it was always at 70-30. In a perfect world, what you'd want to do is every time you change the asset allocation, you open up another account. But Tom Scanlon nor myself would ever want to do that because it doesn't look right. So as of, when you look today at today's numbers, so if you look at year to date, which is the best comparison of the asset allocation to the benchmark, we're at 465, the benchmark was at 445. But even when you look at the since inception number, the benchmark was at 504 and we're at 477. So we're not too far off, even with the change of the type of asset allocation.
Is this inclusive of fee?
Yes, everything is
So if there's an 18 basis point fee, that's come out
already on top
our
of that.
portfolio.
Yep,
But the benchmark doesn't have the fee.
correct.
Okay, it's just something to point out
Correct.
that if you add the 18 basis points back in, you're
Now we're even closer.
even closer. Do you ever do a blended return of the benchmarks to kind of, you were 60-40 3 months ago for 3 months, and before that you might have been 50-50 for 6 months. Do you ever put a hypothetical, I know you can't call it performance, but hypothetical benchmark of what you would have returned had you been, compared to the benchmarks you were in?
I would have to go back and see what it was at that time. I don't believe the team have been able to get the data to say, okay, all right, here we are at this.
Yep.
I would have to go back to our reviews at that point in time and say, okay, here we are 60-40, here we are at 50-50 to get the comparison.
Okay. I'm just wondering, I'm not even sure if you're allowed to present it that way,
I'm not sure if I can.
But-
I don't think
but it's a-
compliance would allow that.
but interesting to know where we would have,
Right.
because I know we weren't 70-30, so it's tough to go a 70-30.
Correct.
Yeah.
And unfortunately, that's what the
Yep.
systems out there in the world say we have to use. Like I said, the best way would have been, okay, close it and open it, and but unfortunately, our industry doesn't allow that. When you look at the year over year, you can see down since the calendar year started in '23, your portfolio is on 465, the benchmark's at 468. Okay. But then if you look at 2022, where everything was down, 1622 to 1443 to 1425. Again, you're comparing other benchmarks to not the proper asset allocation of the fund. How we try to manage the account, and in most cases, you see that, we look at these accounts and risk-adjusted returns. So we want to make, in other words, we want to lose less. We don't want to have Amy come to you and say, oh yeah, I lost 8% and everybody in the room lost 4%. And you can see that. We're not going to try to hit the top, because if you hit the top, you're gonna hit the bottom. These are taxpayer money. So we are more inclined to be more conservative because I've been in many, many a meeting where a person would say, well, my portfolio did that. Well, that's your portfolio, it's not taxpayer money. So we are always, and I would hope that we all want the towns to be more conservative with taxpayer money.
I mean, I can see at least 4 years where you performed much better in the down markets.
Yes, clearly,
2022 is kind of an anomaly, but
correct. And how do you win there? When everything was down. But as you can see, in any of the down markets, we outperformed it. And when we have a good market, we usually hang in there. Sometimes we beat. So for instance, you look at 2020, that was during COVID. There were some opportunities in the fixed income side that we were able to capitalize on, and bought it before everybody else in the world, and did well.
yeah, 2016 as well.
So then when you get back over to pages 6 and 7, those are your actual securities. I am not adverse at giving you, okay, we own this because of that. If you ever had questions on that, please send them to Amy, and then I'll get you a full description of what we own, why we own it, and so on and so forth. So as you can see, big picture, you own domestic equity, international equity. Then you have that alternative sleeve. That's where we'd like to put the private equity and real estate. What the intent of alternatives, when the market's going down, it's going to act as that umbrella to not let it go down much further or limit the downside. But unfortunately, when the market's going up, they are actually act as that drag. So as one of my colleagues would say, we want to try to keep these accounts on the kiddie coaster, so we don't have the big up and the big down. We want to just be nice and smooth. And that's what we've tried to do here.
Question.
Sure.
Obviously using a lot of funds here.
Yes.
Not ETFs, but in some cases, I think there are a few ETFs.
Yep.
What are the fees charged by the funds, and are those on top of your fee?
They are on top of our fee, but they're inside what the total return is.
Okay.
Okay, so what you see there, they are all institutional shares.
Yep.
Okay, so we are buying the most cost-effective. We have just changed out our large cap JP Morgan US Value Fund. As you can see, there's trade there. Our team just went out to bid. We had, I forgot how many millions of dollars went out to bid.
Yep.
Had 3 interested parties, to your comment earlier. We are doing that similar to the retirement system, and we interviewed 3 different large cap value companies, and then we made a wholesale change.
Was that, and who'd you change it to, or did you change it?
Made it to JP Morgan.
Okay, where was it before?
Caroline, I think.
Okay.
Gene?
Could I just ask, on the 18-point fee,
Yeah.
is there any performance additional fees?
No, that is the fee,
It's flat across.
flat across.
Okay. Okay.
So it doesn't matter what account.
Okay. So if you made money of a higher percentage than we estimated, there's no additional fees?
No.
None?
So as the TV commercial says, we have a flat fee.
Yeah.
So if the account grows in value because it did well, you're going to make more, and,
And you make more.
and we make more. And that's not a commercial, but that's,
It's the other commercial.
so that's OPEB. If you like statistical information, you have it on the next 2 pages. When you go down to the accounting report after the disclosures, on page 1212, you will see on the top of that page, you'll actually see what the benchmarks are and how they're made up. Okay? When you go down to the accounting report, as you can see, we keep track of the electric light OPEB, cable OPEB, town, water, sewer, and stormwater OPEB. So this way here, all the money goes in from the various enterprises, comes in, they then benefit from the pool aspect here also. Okay. The last account is your operating account. These are all fixed income. So that's why I said on that first chart with the 3 buckets, talking to the auditors through the years here in Shrewsbury, because of the makeup of this money, we are allowed to extend duration in this account. Okay? If we were not allowed to extend duration, to your point, they'd all be sitting in a money market account. So, Tom Scanlon years ago said, this is the way this account was before I got here in 1987. You know, same type of monies, the way it's always been invested, and it's being allowed to do that because the town doesn't touch this money. So why not invest it? So when you look at this, you'll see in the slide 2, you'll see 100% is in fixed income, paying you a return of current yield of 3.95. And to the question that you had at the beginning of your meeting, last June 30th, you had a current yield of 1.75. So on your locals, there's your number.
I do have a question.
Sure, Dennis.
I see in cash you have a negative 24%.
That would have been a transaction.
Okay, I just want to make sure we weren't.
Yeah. No,
I didn't think you could.
What ends up happening is when you buy the security,
Yep.
it shows up in the data up above, okay? And then if it has to wait for settlement, it shows up above, so you need a debit on the bottom.
Okay.
It's purely accounting at that point in time.
I just want to make sure that's a accounting anomaly. And
Yeah,
if you look at it next week, it'd probably be a much.
It'll be down to,
Maybe
whatever the
zero.
town has said.
Yep,
Probably zero. Unless Amy has told us that, okay, I need some cash coming out, and then now we're stockpiling cash. But that, when we get into the detail of the account, I'm sure we can find out what security that is. I'm sure that's a treasury.
It's a, cash flow
Cash, and that's.
or
all it is.
settlement.
Settlement.
Okay.
Okay, so over here, you saw up above your current yields at 3.95, where last year it was at 1.75. Again, because it being all in fixed income, you're not gonna see this grow, unlike you had in the OPEB.
But you
So-
did move it around between different assets in response to market.
Oh, yeah, you'll see, well, you won't see it, we tried to increase credit quality on the fixed income side,
Right.
and we bought more treasuries,
I understand.
okay?
I see. We also moved a lot into the money market fund where we got a better yield.
I'm sorry.
You moved a lot, not only into treasuries, but into the money market mutual fund.
And that could have been just a holding spot on May 31st.
I see.
Okay, because the money came in, there was settling up of accounts here in town, so there were a lot of money coming in at the end of the month, so I'm sure it looks way different than it does today.
But we
would
did
have
get a good
invested.
yield of 4.27% on it.
Yeah, the money market's still paying very, very well, too. Okay. So when you look
Jim,
at,
please.
I'm sorry.
Just a point of interest, on the corporate bonds,
Yep,
have you had a lot of buybacks?
what do you mean?
Corporates buying your bonds back because of the percentages they had guaranteed and they didn't want to?
It hasn't happened in a long time where a bond has gotten called. That's when they're buying it back. We haven't had them called. We're keeping them to maturity.
Are you buying no-call bonds or?
I think it depends. We're gonna hold them anyways. And if they do call, the risk of a call, I know that there's been a couple of other entities out there that had bought a callable call, and they were hoping it get called and didn't get called, and things happened. I can't speak to the calls on corporate bonds. On agencies, certainly they have a regular call, right? So when you're buying, what a call is the company is looking to refinance. So they're gonna say, hey, can I get that back because I can reinvest at a lower rate? So you'll see us buy calls during certain time periods. We're not buying calls right now because we want to lock it in. We don't want them calling it.
That's what I mean, so you're buying, right now, you're buying locked-in rates.
We're buying bullets and
Bonds.
say, okay, we're buying stuff that we don't want them to call it.
Yep.
If we
When you
got a
say
high,
buying calls, that's not derivative trading, right?
pardon?
You said buying calls, but that's not derivative trading.
No, it would be
A callable bond.
a callable bond. So for instance, we would buy callables and have in this account on the agency side. Okay? Yeah, it all depends on what we believe the market's going to do. Today, we are not buying callables, we're locking in rate. If you were looking at this account a couple of years ago, we probably would have been loaded with them.
Because a callable bond usually comes with a premium interest rate.
Correct.
Yep.
So, it depends. I mean, you have a call, if it goes up, they're gonna call it back, so there's some benefit, but you could argue that there's no benefit.
Yep.
Right? So then when you look at,
Milind,
Yeah, one
Mr.
more. So
Sure.
within government agency, do you look for state agency bonds or is it always federal?
towns are allowed to buy, states. You don't own any here. What we owned, a state bond, not Mass. See, the difference is, here in the town, in all towns, you're not paying taxes. So there's really no lift and benefit to buying a bond that you're not gonna pay income tax on. Have we? Matter of fact, way back when, we owned Tennessee Valley Authority. So it really depends on the benefit to the community and the account. So you'll see on page 6, the account's made, as we saw earlier, 2.07. Being invested, it's would have been at 122. You're more detail on page 7, and then you get into the actual account. And that's where you'll see your corporate bonds, anywhere from Union Pacific to a railroad. That was one of the first railroads that we bought. Believe it or not, the legal list allows you to buy railroads. You have Duke Energy, Johnson & Johnson. Then you have your agencies, and then you have your treasuries. And then you have your cash, and then there's your debit of that $21 million. Chances are, if we went through and added up all of the May 31st, 23 securities, we're going to come close to that $21 million. So it's just an accounting, because it's showing up above in detail. If you don't do the journal entry down below, you're going to look like you have too much money.
So one quick question.
Sure.
So within the bonds, do we always, or is there a mix that we look for a high yield and or investment grade?
These are all investment grade, okay? And as I said earlier, we have gone back through with our concerns over a recession to make sure that we are buying good quality companies that would fare well in a recession.
Okay, thank you.
The last page on the accounting report, that's where you see the total monies, how much has been put in, and this accounting report is as of 3/31. So that's why you have the discrepancy from the 85 that you saw, 2 different periods. So this accounting report you get on June 30th, so that's why you don't have a direct link. So it's not that there was something wrong, it's just 2 different periods. Okay, so this one, the town will get a June 30, which then will match back up to this. Okay, and like I said earlier, that journal entry, the money had come in the month of May. Okay? The last sections, if there's no questions there, I'm not gonna go over it. Here's your Mass General laws. Great reading, only kidding. And then it tells about our company. So Mr. Chairman, I hope I answered all your questions.
I believe you did. Are there any other further questions for Mr. Patterson? Millen, please.
One more clarification. I know you talked about equities where there is a basket of 22, 24
Yep.
securities. Do we have similar thing for bonds as well?
When you look at the section right below, right above where it says about the company, you will actually see that legal list. Okay?
So the last section in the report is about the company, so if you want to go in like, say, I don't know, about 8 pages or 9 from the end, you'll get to the legal list.
Okay. So going from the bottom back, you'll see the funds that we can own. Okay. Right there, you'll see
Yep,
the
got it.
funds that, you'll see the funds that we own, or can own, I should say. Then go up one more. Then on the right-hand side, you have continuation of investment funds. On the left-hand side, you'll see the common and preferred stock. There's your common and preferred stock. Then it gets into descriptions of what other debentures that you have, insurance companies and so on and so forth.
Yep.
And then to your point, other investments, here they are here where you see the gas, electric, and light. Okay, so there is a list.
Yep.
Here it is. So if you take the gas and electric plus the one where it says common and preferred,
Yep.
there's your list. Okay?
Can I ask one?
Sure.
Thank you. One quick question. I think maybe you have mentioned this previously, but so we have bundled all these funds, right? Especially the symmetry fund, stabilization fund, and all those things. So when the money comes back, so how do we distribute the gains? How do we manage that? How do we track that, and give them appropriate funds back?
So if you go to that accounting report, we'll keep it simple and go to the end of the OPEB. So, okay. So when you look at something like this, okay, what Amy will do in this case here, she has 20, in the center column it says net earnings, $21,000. Okay. She will then apply those funds accordingly.
Okay, thank you.
And then same when, on the bigger one, all those separate line items, depending on what the town does, it will then go to the appropriate account. Okay, based off its share of ownership. So if it's $1 million account and you have $100,000, 10% of the earnings will go to that fund.
Thank you.
Are there any other questions? Diana, please.
Earlier you had mentioned about the towns can do the special legislation and hoping that there will be enough towns that do it that might help. Is that something that Shrewsbury has requested?
At this point in time, no.
Okay.
And you can do it on your own. So if this thing fails to get to the governor's desk, if you chose to do that, how the process would be is you would bring it to town meeting. Town meeting would vote it, and then your state rep would bring it into, state rep, state senator would bring it into Boston, and it would be only for your trust funds. And will not include your stabilization, because the general court does not want the risk of stabilization being out in the market. Because if something happened, as Kevin said earlier, he doesn't want to come here and say, yeah, we put all our money in whatever and lost it. So to do the special legislation, it would only be on those upper sections on that accounting report and not the last section where it says stabilization funds. Okay?
Okay.
Basically, the long term.
Long term.
Yep.
Stabilization, as we all know, 2/3 vote at town meeting, and it can go. And that's why they don't want us to take on that risk versus cemetery perpetual care. And in all those other funds, they are long-term. You know, particularly the principal.
Any further questions? Jim?
Just real quick, Chuck, I just want to thank you. This is really thorough,
Thank you.
informational. I really got a lot out of it.
Thank you.
Just one real quick question. It looks like, have we always been with your firm? Looks like you've been around for 27 years. I'm just curious, has Shrewsbury always been?
Well, do you want the full history?
No, I'm just curious, like, we haven't been with a competitor prior. We've been with you folks for as long as you.
Where the account started was my predecessor, Bill Garton. I started here in Shrewsbury in December of 1985.
Okay.
Bill was working with my boss at Worcester County National Bank. So where that came into play was the operating account. Then Worcester County became, Shawmut became bump. Then I came here, and Tom left Worcester County and opened up a shop down in Florida, AF Best. Stayed there for 9 months. So the money physically left, went to AF Best because Tom was doing a good job for us. Then Tom came back, he opened up Bartholomew and Company, and the money moved over. The trust funds, I was managing myself here through a bank account relationship. And then I actually gave that to then Fleet Bank, and they were doing the trust funds. I put it out to bid, and Tom won the bid. And pretty much right now, no one in the Commonwealth, we manage funds for about 270 entities. There's 351, we manage 270.
Community.
No one has lower rates at 18 basis points for investment management.
Right.
So that's the history. It
Well, thank
started
you.
out at Worcester County National Bank from my predecessor. And I'm very happy to say I was a treasurer here in Shrewsbury, so thank you.
If there are no further questions, I'd like to thank you on behalf of the committee, Mr. Patterson, for your time and going in great detail. Thank you for this information.
Thank you for your time.
Thank you.
And good luck.
Thank you.
Thank you, Chuck.
Shall now move to item number 5 on the agenda. So this is basically, in case we don't have a July or August meeting, we have to authorize either the chair, myself, or the vice chair to assign the reserve fund transfers. Unfortunately, we don't have a vice chair at this point, so would that transfer to the clerk, or is the clerk automatically promoted to vice chair? What is the,
If you could
Awesome.
vote the clerk, I think that would be most appropriate,
the clerk would?
rather than the vice chair.
So are there any questions on this particular item?
No.
Jean, please.
Don't we normally put a dollar figure on it?
I don't know, do we do that,
I think we
Kevin?
did.
So there's
69.
only $67,000 left in the reserve fund.
Okay,
So you just
We're
would want to
limited by
take
that.
that into consideration if you want to set a limitation.
are there any other comments? Do we basically go ahead and put that dollar amount? Any comments, opinions from the committee?
I guess we could decide whether we want to do the full 67 or if we want to limit it below 67. I would say it's a reserve fund that was there for the reason of doing this, so I would set it at 67,000 or whatever that number is.
I would agree as well. I was waiting for everybody's opinion, but I think also that, given that it is a stabilization, I mean, it is the reserve fund, the entire amount should be available in case of any emergency. Jean, do you have any other?
Oh, no, it used to be, we put a set of, the way it used to be structured, we'd put a set amount on, let's say, $5,000. And if it was gonna be over $5,000, then the meeting would be called, you'd be called back into session
That's fine as well.
on there.
That's fine as
But
well.
it's strictly up to what the committee wants on there. Most of the time, they're never near that dollar number.
Right, it's,
That's the way it used to be handled. There was a few.
yeah, I mean, given costs and all that, I think 67,000 is not such a big amount, given the, so if there are no other suggestions, I suggest that we basically vote for the full amount in the stabilization fund to be authorized by either the
Well,
chair or the clerk.
I think Gene does have a good point. We maybe make it 10,000, because if it's more than that, it probably would be more than just the chair or the vice chair making that decision. I mean, it does mean we all have to come in and over the summer, but my 3 years on the board, I don't think we've had to come in over the summer. So, but I think 10,000 actually probably would be, or even 5 would be a better. Because we might as well have a quorum at that point.
I agree.
I would misinterpret it. I was thinking limiting the amount that we would spend it all, but you're right, for one person to do it, I think 5,000 or 10,000 is a much more appropriate number. And hopefully we won't have to use it, and hopefully we won't have to come in.
Yeah, I
So,
don't think we've ever-
10,000 seems to
ten,
be a
10,000
10,000
is the committee.
logical amount.
Okay, I think that's a good idea. So, the motion will be to authorize the chair or the clerk of the finance committee to sign reserve fund transfers of the amount up to $10,000 in the absence, pending ratification as a subsequent July or August meeting. Oh, sorry, I misspoke that. A $10,000 basically limit in terms of allowing the chair or the clerk to allow that transfer. Can I get a motion to approve that?
So moved.
May I get a second?
Second.
All in favor of the motion, please say aye.
Aye.
All opposed, please say no. Nay. The motion passes unanimously. The next item on the agenda is basically the reorganization of the committee. On June 30th of this year, the committee will, the chairs of the chair, vice chair, and the clerk will basically, their term comes to an end. But if we do not have a meeting during the summer months, it's only appropriate that we postpone that vote to our first meeting in September. Do we have any comments or suggestions or concerns related to that?
This is, the general bylaws say that the finance committee shall appoint a chairperson in July, so that's why we have to take this vote every year.
So if there are no concerns, I will make a motion to basically postpone the reorganization to our first meeting in September.
So moved.
Can I get a second?
Second.
All in favor of the motion, please say aye.
Aye.
All opposed, please say nay. The motion passes unanimously. The next item on the agenda is reviewing our meeting schedule. So July 20th and August 17th of 2023 are tentative. In case there's any urgent business that needs our attention, we will coalesce. Otherwise, it'll be on September 21st at 2023. Any comments, any concerns about those dates? Okay, so we'll approve those. So we'll go back, go to number 8, other business. Does anybody have any other business they wish to state? If not, we shall go to correspondence. We received email correspondence from Hannah Kane, our state rep, regarding the budget, some budget updates. Everybody should have seen that. We received 3 letters, one from the finance, from 3 letters from Jim Kane, one to appoint Rajesh, and the reappointments of both Dennis and Diana. Any comments on the correspondence? Anybody want to mention anything? No? Okay, then. Sorry, you want to say?
Just would like to welcome Rajesh once again, and then congratulations to the reappointed members.
Also, to reappoint Diane.
Yes, I mentioned Diana.
Oh,
Yeah.
I didn't hear. Excuse me.
Any other comments? If not, then may I get a motion to adjourn?
So moved.
Second.
All in favor of adjournment, please say aye.
Aye.
All opposed, please say nay. The motion passes unanimously. Thank you.